Kia ora and welcome to episode 65 of Bridge Talks Business with Milford. It's a fact that women on average live longer than men, 3 to 4 years longer. And when you're planning for retirement, whether you're a man or a woman is actually quite an important factor in determining how much money or how much asset you might need. Retirement can last 20 to 30 years, so 3 or 4 is not insignificant. Luckily, we've got Jess Travers on the show this week with a plan to help women invest. First, here's your top 5 business bits from the last 7 days. Coming in at number 1, oil spiked over the weekend on the back of this news out of the Middle East, on top of the rise that we've already seen year to date. Other markets more muted, with minor weakness in shares and a stronger US dollar, a sign of investor confidence despite the headlines. Number 2, to AI. Nvidia reporting blockbuster earnings last week. Despite this, the stock fell post-announcement, as investors appear to be well positioned for this ongoing semiconductor boom. Coming in at number 3, across the Tasman in Australia, inflation's still running hot, too hot for the RBA's comfort at 3.8% year over year. Largely, this is electricity subsidies coming off, but the markets still think they will keep increasing rates this year. Number 4, a key US business survey showed continued optimism from US manufacturing firms after 3 years in the doldrums. And finally, at number 5, this week investors will focus on the US employment report, looking for any signs that job growth is being hit, negatively impacted by AI. Plus, we will keep a close eye on oil. All right, it's time to get stuck into our feature interview for this week. I'm delighted to have Jess Travers back on the program, Wealth Management Advisor for Milford. Just a reminder, this segment is informational only and should not be considered financial advice. Jess, welcome back. It's lovely to have you.
Thank you.
So today we're talking about women investing and confidence in investing. Why are we talking about this today?
That's a great question. So first of all, we want financial literacy to be an important factor for everyone in New Zealand. You know, all Kiwis should feel confident with their investing, but there's a few reasons why it's particularly important for women. First of all, on average, women tend to live longer in New Zealand. So women tend to live about 3 to 4 years longer than men. That means we're going to need more money at the end of our lifetime, potentially. We might need more money for health costs if we're living a little bit longer. So investing can help us fill that shortfall when it comes to the end of our life.
And that's not insignificant, right? 3 to 4 years on a 20, 30-year retirement.
Exactly. So, you know, even if you retire at, 60, you might need money for sort of potentially 20 to 30 years plus. So investing will help you get there. Second of all, we would love to help close the pay and wealth gap. So there has been some really great work done in this space, but on average, females are still earning about 5.2% less than men, more in some cases for certain groups. That's as at June 2025. So that means through our lifetime, we are earning a bit less potentially. It means we're able to contribute a bit less to our investments. And we know that come retirement, currently females are retiring with around 25 to 36% less than males in their KiwiSaver balances. So that's pretty meaningful. So we would love to be able to get New Zealand women thinking about, hey, can I continue to add a bit more to my KiwiSaver or keep adding, perhaps when I've stepped away from the workforce, because we know that's pretty common, or if I'm earning less for a period, how can we think about continuing those savings and keeping your investments on track?
Does one cause the other? Like, is the pay gap or taking time out of work during your working life, does that cause the wealth gap at the end?
Yeah, potentially. So they are both really unhelpful when it comes to creating long-term wealth. But we know by having a conversation around, hey, let's get your money and investments working really hard for you along the way, so that if you do have a gap in your earnings or time away from the workforce, then they are maximising your savings over a long period of time. So let's get you in the right investments. Let's talk about continuing to add to them, if you're able to help close that gap over your lifetime.
Does this take into account your partner's whether you've got, if you've got a partner, your partner's assets as well, which might be jointly held?
Yeah, I mean, look, it's great to have good joint wealth, but we would love for females to feel financially independent because we know life is going to throw us some curveballs along the way. You know, that's a given. We've got a pretty high divorce rate in New Zealand. I think it's around 41% currently. You might face job loss. There might be health issues, which means you're unable to work for a while. So we would love for females to feel that they are comfortable taking the reins, you know, should life throw them a curveball.
When it comes to risk, men better, I don't know if that's the right word, or worse at taking risks, because, you know, young men get in car accidents because they take more risks than young women when they're driving. Is the same principle kind of applied when it comes to investment decisions?
This is a really good point, actually. So we have seen some observations that men generally are more comfortable taking investment risk. This is a real generalisation, but we would love for females to feel confident getting themselves in the right type of investments to maximise and grow their wealth over time. We know men are comfortable carrying more debt, generally speaking. They are tending to go into higher growth investments, you know, when they're younger. We would love for females to feel that they're confident. Females make fantastic investors, and we've seen that perhaps what's holding them back is actually just a lack of confidence. So that's why we're having these types of discussions. We want females to access the wonderful tools and resources that we've got to feel more equipped and get comfortable taking risks. I talk about this a lot. There's a real risk of not taking enough risk. So what I mean by that is that if females, you know, aren't getting themselves in the right types of investments, they're potentially foregoing some really great longer term returns. And so they'll end up with less by being more conservative through their investment lifetime and journey. So we would love to get, well, all investors, but especially females, comfortable taking risk, get in higher growth investments like shares, because if you do have a long time frame, then you've got the ability to ride through the bumps and ups and downs in share markets.
Because you're living longer.
Potentially, yeah.
So you've got all the time in the world to do it.
Yeah, that's right.
And the younger, because, I mean, we've talked before about compounding returns. Amazing miracle that is compounding returns. The younger that you can do that, the earlier you're in, then the longer you've got.
Absolutely. Time is your superpower when it comes to investing. So compounding returns, as a reminder, that's the growth on the growth over time. So the longer you're invested, you get more and more benefit from the compounding returns. So that's why we're big advocates for starting as early as you can when it comes to investing. Even if you start in your 50s, you've potentially still got a 20 to 30 year investment time frame. That's a really long time. So it's especially important for those starting in their 20s and 30s, but just as important for starting later in life as well.
All right, so what are some hot tips, Jess, for women, female investors, young or new investors who are, as you say, maybe in their 50s, maybe in their 60s, who cares? What are some tips for investing?
Great. Start as early as you can and invest as much as you can and as often as you can. So adding to your investments regularly can really move the needle over a long period of time. I would also say that time is your superpower. So, you know, leave that investment in there for a long time. Keep contributing to it, even if you do have a gap in your earnings. Make sure that you have your investments working as hard as they can for you. So check your KiwiSaver fund. Are you getting the maximum benefit from your employer contribution? Should you, perhaps adjust the fund that you're in to get you a really nice competitive rate of return? So do a stock take there. The other main one I would say is, automate your savings if you can. So that is a great tip. If I had to manually put money in my savings and investments, Ryan, it would not happen. Because it's automated for me, it's out of sight, out of mind, it's effortless. So explore taking risk, get in growth assets over time, like shares, bonds, property. Those are going to grow more for you than savings. Savings in the bank alone isn't enough to get us where we need to be. You need to be in growth assets over time because, remember, inflation erodes any benefit from having cash in the bank.
And yet there is still this attitude, and it's not just a female thing, I think it's a Kiwi thing of, I'll put it in the bank, it's going to be safe in there. Just to finish, a lot of what we've talked about today is almost a mindset change. It's there is no difference in the ability of men or women to make investment decisions. In fact, as you say, women might actually be a little smarter in that regard. But it's a kind of mindset shift of you've just got to take a bit of risk. So how do you do that?
Look, if you're not sure what level of risk is right for you, you can reach out to a financial advisor. But if you've got a long period of time, then there's a really great reason why you can invest in growth assets like shares and managed funds, because you've got the ability to ride through any movements over the long term. So, risk isn't that you're going to lose all your money. It's not going to disappear. It's how much you're willing to let it fluctuate around by. Like, I'm not an advocate for going out and chasing returns that are too good to be true, but we're really big advocates for getting in investments with a long track record of generating good returns and that are going to set you up really well later in life for the retirement that you want, maybe even some shorter term goals like travel, upgrading your house, that type of thing. So look for really good long-term investments that have a good track record, in particular in growth assets like shares and bonds and property.
Jess, lovely chatting to you today.
Thank
Fascinating
you.
Conversation as always. Come back anytime.
Thank you.
And that was Jess Travers, Wealth Management Advisor at Milford, talking to us about women and investing. It's International Women's Day this month, which is why we're talking about it, but also the confidence to be able to invest. We all know how to do it, but we've got to have confidence to go out there and get it. So don't forget, you can like, follow, and subscribe, or share this podcast with your friends wherever you like to listen. We appreciate you doing so. Until next week, don't forget to invest in yourselves.